Every week, small business owners get a call or an email from someone selling a sponsorship. Maybe it's a local festival, a charity event, a sports league, a publication, and the pitch always sounds the same. I want to share a sponsorship package we have available that's valued at over $10,000, but we're offering it for our best clients at a cost of only $2,000. You definitely want to take advantage of this opportunity quickly since we only have 3 slots available. They send you a deck. It lists out every single thing you get, a logo here, a mention there, a banner at the event, social media posts, your name in the program, and they total it all up. And the math does look incredible. $10,000 in value for only $2,000. It sounds like such an awesome deal. Except those numbers are all completely made up. And more importantly, even if they weren't made up, a logo on a banner has never paid anyone's rent. So if you've ever found yourself about to write that check because the value sheet looked too good to pass up, this video is for you. I'm going to give you a step-by-step framework to evaluate any sponsorship opportunity the right way, so you can stop guessing and start making decisions based on what actually matters, which is results. Aloha, I'm Brent Shiratori, and this is Idea Marketing. I spent over 20 years in marketing, including as VP of Global Brand at Outrigger Resorts and Hotels, managing major brand partnerships and sponsorships. So I know what it looks like from both sides of the table. And what I know is this: most small businesses make sponsorship decisions the wrong way. So let's fix that. Here's what we're going to cover today. First, I'm going to explain why the value in a sponsorship package almost never equals the result you actually need. Then I'll walk you through a 5-step checklist you can use to evaluate any sponsorship before you spend a single dollar. We'll go through how to define your actual business goal, how to assess whether their audience can get you there, how to do the math on what return you'd need to break even, and how to score the whole package. By the end of this video, you'll have a simple scorecard you can use every single time someone tries to sell you a sponsorship. And you'll know almost immediately whether it's worth the conversation or whether it's just time to pass. Let's start with the value that they claim. When you get a sponsorship proposal, it usually lists out everything you'd receive. Logo placement on the event banner, $5,000. Mention in the email newsletter, $2,500 value. Verbal shout out from the stage, $1,500 value. Social media posts, $1,000 value. Total value, $10,000. Your cost, only $2,500. Here's the question almost nobody asks. How did they get those numbers? The honest answer is that they probably didn't have a robust formula based on comparable outlets and alternative placements with audited data on attendance, view time, and propensity to convert. They probably just estimated them, usually by asking themselves what sounds impressive enough to make this package look like a deal. What's a logo on a banner actually worth? It depends entirely on who walks past it, whether they're your ideal customer, whether they even notice it, and whether noticing it would even get them to do anything at all. In most cases, the answer to all 4 of those questions is probably not much at all. Logos don't generate leads. Mentions don't necessarily close sales. Impressions are not the same thing as intent. And this is the core problem with how most sponsorship decisions get made. Businesses compare the package price to the perceived value, but the perceived value was made up to begin with, so the comparison is meaningless. The only comparison that matters is this one. What will this sponsorship actually do for my business? Not what is it theoretically worth? What will it actually do for me? That's what the next 5 steps are designed to help you figure out. Before you evaluate anything, you need to know what you're actually trying to accomplish. Now, that sounds obvious, but most business owners skip this step. They see the sponsorship opportunity, it feels like good visibility, so they go from there. But visibility isn't a true business goal. You can't deposit visibility in your bank account. And without knowing what it's supposed to produce, you can't evaluate whether it will work. So write down in one clear sentence, what is the specific result I'm looking to achieve from this sponsorship? The most common goals fall into 4 categories. The first is lead generation. Appointments scheduled, quotes requested, consultations booked. The second is direct sales. Someone sees you at the event, at the venue, in the feed, and they buy, online or in person. The third is partnership access. Sometimes the most valuable thing about a sponsorship isn't the audience. It's the sponsors or the venue or the decision makers in the room who you otherwise have no way to meet. The fourth is exposure to an audience you can't effectively reach any other way. That one is legitimate, but it does require some careful thinking. All sponsorships promise exposure. And if the only reason you're doing the sponsorship is to get in front of people, you need to ask yourself a hard question. Is this truly the most effective and most efficient way to reach these specific people? Because if you can reach the same audience through digital advertising, direct mail, your own events, or a better partnership, then exposure through this sponsorship isn't a reason to do it. It's just a justification. The standard for exposure is high. You need to genuinely believe there's no better path to that audience. Otherwise, there are far more efficient ways of reaching them. So write down your goal as a specific result. That's your anchor for everything else that follows. Once you know your goal, you need to know who their audience actually is. Not who they claim their audience is, who it actually is. Here are some questions you could ask. Who attends or engages with this? Who do they look like demographically? What's the intent behind their attendance? Are they local? Are they in your service area? Are they likely buyers or are they just people? The last question is an important one. A festival might draw 10,000 people, but if most of them are from out of town looking for entertainment and have no interest in your product category, those 10,000 people are essentially useless to you. You're paying for reach without relevance. The right audience is small and qualified, a better fit than a large and general one every time. So push for specifics. Ask for demographic data. Ask for ticket buyer zip codes if it's an in-person event. Ask about the email subscriber profile if it's a media property. A reputable organizer will have data like this. If they don't, or if they resist the question, that's a telltale sign. Then make an honest assessment. Are the people in that audience likely buyers for your business? Would they reasonably take the action you need them to take based on your goal from step one? If the answer is yes, then go ahead, move forward. If it's a stretch, that's worth noting. You'll factor it into the scorecard at the end. This step is where most people get uncomfortable, but it's the most important one. You need to figure out how much return this sponsorship would need to generate for it to be worth the investment. And then you need to assess whether that's realistic. So start with your business goal. If your goal is lead generation, what does a lead normally cost you? If you run Google ads or pay for referrals or attend trade shows, you probably have some sense of your average cost per lead. Say it's $50 per lead and the sponsorship costs $2,500. Then you'd need 50 leads from the sponsorship just to break even. Now look back at what you know about their audience. Is 50 leads from this audience realistic? Could one event, one mention, one banner realistically produce that? If your goal is direct sales, run the same math. What's your average transaction value? What's your average margin? How many sales would you need to cover the cost of the sponsorship, plus your time and any additional execution costs? If your goal is partnership access, it gets harder to quantify, but you can still try. What's the estimated value of a relationship with one of the other key sponsors? What would you normally spend to get in front of that person? Use that as your benchmark. The point is stop looking at what the sponsorship costs compared to the made-up value they've listed, and start looking at what you need to get out of it, and whether getting that is actually genuinely plausible given what you know. Sometimes you run this math and it looks very achievable. Great, that's a green light to keep evaluating. Sometimes you run the math and realize you need 20 new clients from a 200-person event to break even. Then no is probably your answer there. Now, go back through the sponsorship package, but this time, don't look at the dollar amounts they've assigned to each item. Look at each inclusion through one lens. Will this actually drive the result I need? Logo on the event banner. Will that generate leads? Probably not on its own. Your name in the printed program. Will that drive direct sales? Most likely not. A booth at the event. Will that give you direct access to potential buyers? Possibly yes. So if the audience is right and you can actively engage them. A dedicated email to the subscriber list depends on the list quality, the size, and whether you can put a real offer in front of them. I'll be honest with you, this step is the hardest one, and it requires real marketing experience to get it right. Knowing what channel or tactic is actually likely to move someone from awareness to action may take years of trial and error and getting that experience. What I tell you is to be ruthlessly conservative here. The items that are most likely to produce results are the ones that give you direct, active access to the audience with a specific offer. A booth, a speaking slot, a sponsored session, a dedicated communication to their list, but passive brand presence like logos, mentions, names and programs, those rarely move the needle. They might be fine as supporting elements if the core inclusions are strong, but they shouldn't carry the strategy. So go through the list and mark each item. Likely to drive results, possible but uncertain, or unlikely. Weigh the package accordingly. Now, let's put it all together. Rate the sponsorship on 3 dimensions, each on a scale of 1 to 10. First, audience match. How well does their audience align with your ideal customer? Are they the right demographics, the right intents, the right geography? Second, likeliness to achieve your goal. Based on everything you know about the audience, the events, the inclusions, how likely is it that the sponsorship actually delivers on the result you defined in step 1? Third, strength of inclusions. How many of the items in the package are likely to actively drive results versus just adding to the value sheet? Score each from 1 to 10. Add them up. A score of 24 or above is a strong fit. The sponsorship aligns well with your goals and it has a realistic path to return. A score of 18 to 23 is worth consideration, but only if you don't already have other tactics in your marketing plan that could get you the same result at a better cost. Anything below 18, you should probably just pass. Now, I want to be clear about what this scorecard is and what it isn't. It's a framework to make you more strategic than you would be if you just compared price to the made-up value sheet the rep sent you, but it's not a guarantee. The accuracy of these scores depends on the quality of the information you have about the audience and the quality of your own judgment about what's likely to work. The more experienced the marketer applying the scorecard, the more reliable the output. If you're unsure that's worth paying attention to, a fresh set of eyes from someone who has actually run marketing programs can make a significant difference in how accurately you score each dimension. All right, so let's bring this back to where we started. Next time you get that pitch, and let's face it, you will get lots of pitches. Don't let their list of sponsor value guide you. Ask what you actually need to get out of it. Check whether their audience can deliver that. Run the math on what return you need to break even. Review whether the inclusions can realistically drive that result, and then score it. That's it. 5 steps. You won't get it perfect every time. Sponsorships involve judgment calls, and there's always some uncertainty. But you will get it right far more often than you would by looking at a value sheet that someone built in an afternoon to make the numbers look good. The best sponsorships I've seen work are the ones where the business had a clear goal going in, understood the audience deeply, and secured inclusions that actually created a pathway to that goal. That combination doesn't happen by accident. It happens because someone did this work before writing the check. If this is useful, I have a library of videos on this channel covering how to think about marketing more strategically. Everything from building a real brand position, to running a marketing audit, to evaluating where your marketing dollars should be going. Subscribe if you want more content like this. And if you're working through a specific sponsorship decision right now and want a second opinion, reach out. I work with small to mid-sized companies as a fractional CMO, and this is exactly the kind of decision I help people make. Link is in the description. Remember, you don't need to buy more ads when you have better ideas.